Wow, what a market open here this morning. Coming out with some fireworks and just some incredibly heavy differentiation out there. We go out and you take a look at something like a Netflix who, announced today that they were raising their price here in the U.S. and, another 5%. I mean, this rally on Netflix has been news and analysts fueled like no other rally we have seen in a long time. Pretty much every one of these up days has some sort of analyst commentary. Yesterday, no analyst. Now today, no analyst, but a price raise, which is a very, very big deal. So this is a monster move here, for Netflix, really analyst driven, continuing today. We have Adobe. Pushing on to new short-term highs. We have Tesla up almost $10 here this morning. We have. We have, a whole bunch. I mean, from Facebook, there's this tech chase going on out there this morning that is indicative of what we saw kind of summer 2016 or, some periods last year where we just saw this everybody in the pool on tech chase, momentum buyers just really jumping in. And we have that going on here this morning in a way we just haven't seen in a long time. And it's on volume. It's on huge volume, within this. I mean, Facebook's volumes already 1 hour into the market are half of what they were yesterday. 1 hour in, they've already done 50% of all of yesterday's trading volume. Pretty substantial. Just absolutely huge. Now, there's some areas that aren't participating. Micron, which had another negative analyst piece here this morning. Western Digital analysts came out and defended it this morning. Basically said they weren't going to cut their dividend, but these semiconductors are relatively weak out there. Now, the other area where we've seen hedge fund momentum money in the past has been healthcare. Healthcare also up over 1% here this morning. We've seen some money chase into it, here this morning from the Amgens of the world, really kind of chasing in. Bristol Myers, popping back up. We could take a look at Pfizer. It's up 1% here. So we see some of this kind of momentum money, not just in tech, but coming into some of these biotechs here as well. Things like Bluebird Bio, really kind of seeing some hefty strength here today. And if you look at these two groups, you say to yourself, hey, market's up big today. I mean, the market's got to be up pretty darn big to get these, moves here in it, right? And that's, that's kind of the, that's what most would think. But then we go and we look at small caps. Small caps are flat. Okay. They're flat. I mean, we have the NASDAQ up over 1% and small caps are flat. Okay, we've seen that before. But then we go look at banks, right? Obviously, JP Morgan driven here a little bit, right? Banks trading in the red. JP Morgan down about 1.3%. Really hasn't sold off aggressively since the gap. It's kind of held in there pretty well. We see materials, the XLB, down about 1%, right? We see industrials down about 0.7%. So we see this incredible chasing in tech and healthcare, but it's just not happening in the rest of the market. We have not seen this level of differentiation in a long time. In a very long time. And it's one that is very analyst-driven, with some very good positives in tech and some fairly negatives here in industrials and materials. It's one where, we saw Goldman after the bell yesterday, or around the bell, basically come out and take BHP off their conviction buy list, which was interesting. They added BHP to their conviction buy list here in December. And normally stocks they add to their conviction buy list stay on there for a long time. And they took it off a month later. Very interesting. They got about a 10% move on that, but very interesting to see them pull it off here. But overall, a very interesting breakdown here in this morning market. Now, that's not the only interesting thing going on. And before I move on to it, take a look at the sector summary. Right, you can see utilities leading the way here today. I didn't even talk about utilities yet, but utilities snapping back. Granted, after just getting plowed under yesterday, but this has been a big area where the money has come in. But you see, the sectors that typically you want to see up in a bull market move, just say, hey, you know what, this is a really strong bull market move. They're all on the bottom. They're all on the bottom. Consumer discretionary, basically your retail, financials, industrials, and materials. They're all down. The only one that's up that you look at and go, okay, tends to be a sign of a little bit of a healthy market is the tech sector. But you see the disparities here. These are all up big. They're all up over 1%. I mean, they're up pretty darn big. And, we have, these being kind of left in the dust. So you're going to get some very interesting indexes out there. In fact, if you take a look at the Dow Jones is up 0.18%, right? The SPY is up 0.6. Now, that's a pretty big disparity. And then you look at the NASDAQ, it's up 1.37, and small cap, it's up 0.8. So a pretty hefty disparity out there, but definitely not a bull market mix when we look at the sectors. Now, the other really interesting thing out there are the volumes this morning. Take a look at this. We just haven't been seeing this here of late. We get the volume, we get the big volume on the open on this, up move right here. Okay, great. Then we get this 15K volume right here on this next big move up. And then you see this 20K candle on this move down that basically erased, this kind of chop up above 2,600. This really looks like stop hunting. This looks like just stop killing for, in the futures market where basically, these stops over 2,600 just got plowed out. Just absolutely got mowed under, and that's exactly what it looks like here. You can see overnight, came up to 2,600, tested it. I just would not be surprised if when we see the final data that we see that there were a lot of stops triggered right here on this move, and now they're sitting there out of the ball game there. But some big volumes here. I think this is a very dangerous setup for the bulls here this morning. If this reaction low right here at the 29 or 25.92 area gets broken. If that area gets broken, we're going to see those momentum traders kind of go the other way. For now, you know what? There's enough differentiation. There's enough, disparity out there to keep them from, just kind of hitting the sell buttons real fast. But if we start to see, some of these reaction low areas break, that could change very quickly here on the day. So anyway, that's kind of what's going on in this first hour, and you can see the volumes compared to yesterday, dramatically different. Just very dramatically different than what we saw yesterday, and we see some things up very big. We see a lot of flat, but there are some things, the Microsofts of the world. If it has 4 digits or it's in the NASDAQ, it's or 4 letters and it's in the NASDAQ, chances are it's up pretty sizably here this morning. But when you break down the entire S&P 500. And you look at the the index here. Let's come pull it up on an index watch, and I'll just put S&P 500. You can see there are 320 advancers versus 180 decliners here. So that's about what we would expect on about a 15 to 17 point move higher in the market. But it is very very differential. You can see there's stocks that are down pretty darn big. they're down pretty big, and a lot of times on a day like today, yeah, there could be downs, but they're marginally down, fractionally down, not down the way that we are seeing here this morning. One stock that's been halted here this morning for volatility on the S&P 500 is PG&E. And this has had a little bit of a range in it today. You can see the open on it just pretty much collapsed here from 6.20 down to $5, then rallied up to 6.60. It's been all over the place, with some very big movement here. Very big movement here in it today. All right. So anyway, that's a little bit of what's going on out there. It's one where I'm very interested to see how this kind of, plays out. It's not something I think you can look at overly bearish just yet. But if these lows break, I think you can kind of infer something a little more bearish here from that. Now, for the challenge, I have the XLI puts here, probably about break even on them after yesterday and then today, and which, you'd say, well, that's not very fair because, $6. So, yeah, I mean, XLI's down 40 cents. I bought it when XLI was down 20 cents. It rallied 20 cents on me yesterday, declining 20 cents today. But welcome to this market, and welcome to the volatility contraction that we continue to see every day. And time decay is not the big expense right now when it comes to options. Volatility compression is the big expense when it comes to options. And, you can say, well, the market's moving this morning. Why isn't volatility going up? Well, look, the market's moving this morning, and it has some ups and some downs, but it's still not outside of its average true range. It's still less volatile than what has been over the last 6 weeks. So it's it's all relative. Is it more volatile than we saw in August and September? Yeah, most certainly more volatile than then, but not more volatile than we saw at the beginning of this year or even in December. So it's one of those where we continue to see volatility contraction in a just absolute monster way. Taking place out there in the market. Okay. So anyway, that's a little bit of what's going on. I mentioned this morning that I'd be looking for an opportunity to short AMD. I don't have it. I just don't have anything, from a technical standpoint to say, hey, you know what, this is set up, and I can expect for it to move sharply lower right here, right now. So, nothing really for me to do there with that. I've had my eye on Caterpillar here this morning. We've seen this go from gain to loss, and I already have some XLI, so I do have some exposure to Caterpillar here. But we see a lot of these, where we saw these kind of multi-day compressions. With the techs breaking higher, a lot of these others are failing to break higher, and they're kind of still in that kind of compression area and compression range. But, bottom line, I mentioned yesterday, I don't expect after the first hour for the market to move a whole lot. And ultimately, it really didn't. Traded in about a 12-point range the rest of the day and pretty much ended where it was. Today, I expect there to be a little bit more movement. Now, is it going to be incredible? Probably not. But we are moving outside of yesterday's range, right? And so when we see that, we tend to get a little bit more movement here overall. But it is one where very differential, and I think you can be very bullish on certain things, very bearish on certain things, and come out okay. But this is kind of something that is not very uncommon to see around key support or resistance levels, where you get high levels of differentiation around major levels. And we're getting into a key level here for the market. I mean, we're up into this resistance area, or what was the old support area, here for the market. We're up in this area, and we're seeing some of that. We're seeing some of that differentiation and some of the big ups and big downs without the overall market really, really conceding a massive direction here overall. Okay. Alrighty. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.